friends, welcome to your channel Noiseless Investment. Here we decode a company based on the results they have posted and do a fundamental analysis based on the data and get to know if the company is worth the investment or not. Please know I am not a SEBI registered broker. These are my personal views based on the fundamentals of the stock. This video is for educational purposes only. Please do your due diligence before investing. Please like and subscribe and click the bell icon to get the useful notifications so that you don't miss out on the important notifications shared. The important information that has been shared. The purpose of this video is to remove the noise that is made by the operator-driven people and make you invest without noise. So we are going to here do a fundamental research on Natco Pharma. So if I'll go here, so the results for Natco Pharma has come, and if we look into the fundamental analysis of Natco Pharma and look into the market cap of the company is 11,565 crores. The current stock price is 633 rupees, and the ROCE for this year is 17.0%. So the last 3 years ROC was 9.58% and the ROCE for 5 years is 12.9%. So in this front the company has done immensely well. So the ROC, the management has improved their efficiency. Now coming on the ROE part, the return on equity, the amount of the amount that you have invested in this stock. So is the management actually doing the worth in putting your money to actual work and giving you some returns out of it. So here it is the ROE is 15.2%, which is better than the ROE for last 3 years, and ROE for 5 years is 11.11%. So in all fronts the ROE is good. The ROE, the return on equity, is very good. Now the promoters holding is 48.8, so ideally it should be greater than 50%, which is not there. Change in promoters holding is the promoters holding have increased. The promoters have actually increased their stake in this company, in their company, so they are just showing some confidence in their company. Looking into the FIIs holding, the FIIs have increased their holding, so they have increased their holding from to 0.18%. The DIIs, they have also increased their holding. So when the promoters are increasing their stake, the FIIs are increasing their stake and the DIIs are increasing their stake. So all three of them, they are putting some confidence on this stock. Now going on to the pledged percentage, so there is no pledged percentage, which is very good. The earning per share, the EPS for this stock for this year is 34.9, which is in similar lines with last year. That means each stock of yours is actually creating 34.9 rupees for you. Now looking into the sales growth has been 33%. So this is the sales growth CAGR, and the profit growth CAGR is 505%, which is immensely high, which is good. So now if we look into the sales growth for 3 years, it is 9.51. Profit growth for 3 years is 11.3%, and profit growth for 5 years is minus 1.59%. If we look into the operating margin, then the operating margin is 35.9%, which is lesser than the last quarter operating margin, which was 42%, and in the previous quarters it was 16.3%. The latest quarter was 42%, and in the previous quarter it was 16.3%. So the company has beaten its own records for the previous quarter, and now it is 42%. So the results are very awesome in this regard. Now if we go into the dividend payouts for 3 years, it is 30%. However, the company has not been paying a lot of dividend. So if you can look into the dividend yield, it is 0.87% as well. So basically this is a growth stock, But if you look into the PEG percentage, the price earning growth ratio, it is minus 11.4. And if you look into the intrinsic values, it is 332, which so these and current moving price is CMP is 633, which is greater, which is double what the intrinsic values actually say. So as per Warren Buffett, we should always consider a stock when it is near the intrinsic value or below the intrinsic value. So I don't know, I will not be investing in the stock. So please consider your financial advisor before investing in this stock. Now, if we look into the debt part of this company, so it has got reduced debt. So the debt is completely negligible. And if we look into the interest coverage, it is 90.6, which is far greater. So the company don't have any problem in paying off its debt. If we look into the current ratio, it is 6.63. So the company is having a lot of surplus, but they are not able to utilize the funds that they are having in its surplus. Look into the reserves. This is 4426 crores. That means whenever there will be any problems that the company may face, so they can utilize this reserves later. Quick ratio is 4.43. How quickly they will be able to utilize this fund? It is so within a durations of around 3 months, they will be able to pay off its whatever in case of any unfortunate incident with the company. So this is 50. How far away is the stock from 52 weeks high? It is 18.7%, and from 52 weeks low, it is 26.1%. So all in all, I think the company is good, but the only problem that I can see here is with the intrinsic value and the PEG ratio. So PEG ratio is minus 11.4, which is not good. It should be between 0 and 1. If you found this videos useful, please subscribe to my channel and like this videos. Thank you.